We reflect on yesterday's engagement. Clearly, we have noticed that the engagements yesterday have affirmed just one important thing, that innovation in human settlements is no longer a future aspiration for us, but it is a present necessity. We have been talking about this for more than 10 years, and we have been toiling with mechanisms and ideas of implementation, and in several of our reflective and reflection meetings, we had been saying we are not ready. The industry is not ready. The instruments are not ready, and the community appetite and the uptake is not ready. But however, having done a few of the pilots and everything, we are convinced that at the present juncture, we are ready. We have had robust and honest discussions on the regulatory, the technical, financial, and social dimensions of IBTs. We have heard about barriers, but more importantly, we have heard about solutions grounded in research, informed by community experience, and strengthened through collaboration across government, industry, academia, and civil society. Yesterday reinforced that IBTs are not simply about new materials or construction methods. They are about speed, affordability, resilience, dignity, and restoring confidence in the state's ability to deliver sustainable human settlements at scale. We would recall the President's observations regarding poor town planning in our municipal development areas. His Excellency's retort at moving with speed to institutionalize the mechanisms necessary for the IBTs to be rolled out. His emphasis that IBTs should enable the state to deliver faster and in an affordable manner. We also take a recollection of the Minister's indication that the departmental budget will be utilized to drive implementation through the allocation of ring fencing of the minimum percentages within the grant frameworks in provinces, metropolitan municipalities, and also in accredited municipalities to deliver on this. We further recap the Deputy Minister's emphasis that the IBTs should aid us in navigating and improving our resilience to natural and climatic-related disasters. We have also taken note of practical inputs, including one on organizing a proper and coordinated platform for engagement and collaboration with the system owners, and for them to have a formal representative body. We also welcome the input that we should establish a project management unit housed at the Department of Human Settlements to drive the process. We have also noted the clarion call that other existing programs, such as the people housing process, should be extended to the IBT rollout program, and that the platform be utilized to further empower women, youth, and persons with disabilities. We noted the regulatory hurdles and processes and the need to assess the ways and means to assist entrants to the new market to be able to comply, amongst the many key and useful inputs that were made in plenary. The conversations yesterday set a strong foundation for tomorrow, where our focus shifts decisively to why IBTs matter, to how we mainstream them, through implementation, pathways, partnerships, skills development, and collective accountability. We look forward to building on this momentum today as we continue the summit. I wish you the continuation of the fruitful conversations and ensure that we are able to enrich what we have already built upon. May I take the opportunity to then call upon Dr. Desmond Golding, who would then chair the first and facilitate the first session, Section H, on supporting and funding implementation of IBTs to provide a local perspective. Thank you very much. Dr. Golding.
Good morning, ladies and gentlemen. Good morning, ladies and gentlemen. It looks like we are in a very slow this morning. We need to inject some energy. We are in a summit of innovation. Good morning, ladies and gentlemen. All right, I like that. It gives me a great pleasure to be able to be part of the summit today, at which instance we are putting our heads together in one of the most incredible milestones that we are registering as a country, as a continent, as a global community. We know very well that innovation, it's one of the epicenter that is able to move humankind into the next level. At this stage, we are either making history or become part of the advert history. My professor at Harvard University, Professor Kote, who wrote a book, The Iceberg is Melting, he in fact makes an incredible observation where he talks about a colony of penguins, which one of the penguins, which was very observant, his name was Fred. Fred notices that in one of the ice formation, there is a bubble. As you would know that in any ice formation, when there is a bubble, it represents a molecule that particular ice will break. So Fred, in his observation, calls the whole team of the colony leaders and say to them, it is high time that we either adapt or we die. So the point that I'm making is that in any adverse situation, you either become part of history or history will actually make you. And that is actually quite telling this morning as we converge here today that human settlement is one of the fundamental rights that is enshrined in the UN Declaration for Human Rights of 1946. It resonates well with the Freedom Charter that was adopted by this country in 1955, where it says people shall have a right to decent shelter. It also resonates well with Section 26 of our Constitution that talks to rights to dignity. So these are some of the rights that as we converge here today, we need to be able to ask ourselves whether are we still part of the conversion or are we part of the future. So ladies and gentlemen, in that brief remarks, please do allow me to call to the podium our panel of experts who are going to be able to help us to disaggregate and delineate some of the issues that are pertinent to our today's topic. Please do put your hands together as we call to the podium Ms. Bele, who is with the National Department of Human Settlement. A round of applause, ladies and gentlemen. Ladies and gentlemen, please do also allow me to call to the podium Ms. Zandile Sibia, who is with the Banking Association of South Africa. Ms. Sibia. Ladies and gentlemen, please do allow me to call to the podium Ms. Tulufelo Ramatseowa. Please come into the podium, who is from the National Housing Finance Corporation. Thank you. And lastly, ladies and gentlemen, please do allow me to call to the podium Dr. V. Ngobeni, who is with the Infrastructure Fund. A round of applause, ladies and gentlemen. As our panel of experts are converging here, we should be able to say that when we were talking as we were in fact discussing this particular program, two things come to mind. One, what is a concrete program of action that we'll have to emerge with here? And secondly, and I think the speakers will be able to respond to, will the financial institutions be able to the alternative or innovative building technology or material? We know that in this country we've got a very conservative banking system, but it becomes very important that as we navigate, the colleagues are able to share us the risk averse of the financial institutions, the development finance institutions, as well as conventional banking. So ladies and gentlemen, please allow me to call to the podium our first speaker for the day, who is from the Department Human Settlement. She will be talking about the budget alignments to upscale implementation of innovation, building technologies across all the spheres of government. So what will happen is that Ms. Belle will come into the podium, give us a 15 to 20 minutes insights in terms of the issues that she would want to navigate through us in this symphony of discussion. Then after that, she will take her seat back, and the other speakers after that will then open the plenary for engagement, and they will then wrap up after that. That is going to be the running mode for the day. Ladies and gentlemen, please put your hands together as we call to the podium Ms. L. Mpele to address us. Thank you.
Thank you, Program Director. Can I have my presentation be shown on the screen? Thank you so much. So where do I read? I turn like this. It's far. I have eyes problem. Can I have my laptop? Sure, the way they're putting this thing is difficult. Well, as I'm waiting for my laptop, let me take this time to acknowledge in absentia the Honorable Minister of Human Settlements, the Deputy Minister, and the Chairperson of the Human Settlements Portfolio Committee, and the Honorable Members, the DG, the MMCs, the MECs, and all protocols observed. Let me take this opportunity to welcome all our distinguished guests today. Let me appreciate for all the people for being here with us today. I have been given a difficult task to talk about the budget alignments. We have heard yesterday all the discussions, and we know that most of the people, they are saying that we must give them enough money so that they are able to implement. So that's what we're going to talk about today. We are going to talk about the funds that are available. We are not talking about something that is not there. We are talking about the funds that are available to assist us with the implementations of all the programs within the human settlements, and more importantly, to implement what we are talking about today. Can we go to the next slide? However, it is more important to talk about, before we dwell much, to talk about the medium-term expenditure framework guidelines. These are what the government is working on. These have been approved by Cabinet. It tells us as government, how are we supposed to administer the funds of government? Now, I'm going to start with the purpose of the guidelines. So this one is very, very much important. The guidelines that have been approved by Cabinet, it talks about the reaffirmation of the government's commitment to a more disciplined, transparent, and strategically aligned budget process. So this budget process, it supports South Africa's long-term fiscal objectivity and the national development priorities, because we have got priorities that we need to deal with. More importantly, we need this budget cycle, the one that we are talking about from the 2026, is effective from the 1st of April 2026. We need to have an improved coordination, broader consultation. That is why we are here, colleagues. Greater focus on spending efficiencies. This budget, the guideline calls for a more responsive and impact use of public resources. The next slide, it talks about the economic context. This, it talks about, when you go deeper, it talks about when we, as a country, we are still suffering from the impact of COVID-19. We have not yet recovered. Now, it talks about the economic growth of our GDP. It talks about the political uncertainty, we know about this, the high borrowing costs. It talks about the constraints. You know, on Monday, we woke up with around the city of Joburg and city of Tshwane regarding the infrastructure investment. People, when you go on the media, they were talking about the failing infrastructure when it comes to water. Everybody says we don't have water, we don't have electricity. So it means that we need to start investing more in our capital infrastructure, including us as human settlements, because whatever the structures that we are building, they need to form part of the country's GDP. we are requested on a quarterly basis to report to the Stats SA on the capital investment when it comes to our houses and all the infrastructure. Now, what does the guidelines say regarding the MTEF fiscal strategy? Now, government says for this 2026, for the next 3 years, we need to pay attention to ensure that we foster the macroeconomic stability. We prioritize, as I said earlier on, the infrastructure investment. We need to start investing more into our infrastructure. We need to support the state capability. We need to capitalize the economic reform. Now, the next slide now dwells more into human settlements. Yesterday, the Honorable Minister spoke about the Constitution of the Republic of South Africa. I'm on the next slide. Yes, that one, yes. Now, as human settlements, our function comes from Section 26, that everyone has the right to have access to adequate housing. Then, Section 26(2), it is the responsibility for the state. They have given us, as the Department of Human Settlements, to make sure that given the available resources that I'm going to talk about on the next slide, we need to utilize those available resources to achieve that right. So we have got the human settlement grants on the next slide. This is the available resources, colleagues. As we have been hearing yesterday that people are talking about money. When you look at, and this is published on the appropriation, it's going to be published on the appropriation. When the Minister of Finance tabled, we have got over 30 billion within the human settlements. So we need to use the available resources because there's no additional money that is coming. What has been given unto us, we need to make sure that we prioritize into what is it that we want to do. So given the capital grants, these are the capital grants that we are sitting with as human settlements. We are having, number one, the Human Settlement Development Grant. This is the biggest conditional grant, which is the Schedule 5. This grant is transferred to all the provinces. The implementing agents on the programs of human settlements are the provinces. They are in this room today, all the 9 provinces that are here. Together with the metropolitan municipalities, we give them what is called the Urban Settlement Development Grant. And yesterday we spoke about the informal settlements. The mushrooming of the informal settlement, the growth within the informal settlements. What is it that we are doing as human settlements to make sure that we deal with the informal settlements? We've got 2 grants. One is the Informal Settlements Upgrading Partnership Grant that is transferred to provinces. We have the Informal Settlements Partnership Grant that is transferred to the metropolitan municipalities. So there is money. The only thing is we are expecting our implementing agents as a national department, which is the provinces and the metros, to assist us to deal with the challenges that the country is facing. Now, yesterday, the members here, they were talking about social housing. We have got what we call the Consolidated Capital Grant. This one is transferred to the Social Housing Regulatory Authority to deal with the rental stock with the social housing. Then lastly, but not the end of it, we have got, yesterday we spoke about the emergency housing. There were a colleague from the municipality that were talking about the temporary accommodation. And then what is it that we are doing when there are disasters? What is the response? Immediately when the disaster occurs and the houses are affected, it is expected that as human settlements, because of the Constitution, we need to chip in and assist those destitute, those that need immediate housing. What do? We have got what we call Emergency Housing Fund. In that Emergency Housing Fund, we respond immediately with the temporary, what we call a temporary residential unit. Next slide, I won't talk about it. This is the outputs of what the grants are we are supposed to be getting, but I've spoken about it. I want to talk more importantly, the reason why we are here. I've spoken about all the grants and all the capital funding that government, and this, we don't expect the residents to be paying for it. As the president has said, the Honorable President yesterday, that we are the only country that are giving this for free. However, we have got what we call the norms and standards that are published because we don't want any other person to just say we can build a house. Now, the subsidy quantum, it is known. It is published. It was approved on the 1st of April, 2023 by the Minister of Human Settlements. Given the subsidy quantum, we are saying we have what we call a 40 square meter house, but we are paying it based on the contents thereof. We are expecting a house to have a roof, to have a foundation, the plumbing and a toilet, 2 doors. So the cost of a house, of a 40 square meter house that we are talking about, that we are expecting, or that what we are saying as IBT, can you give us this house? This is the house that we are talking about. Unfortunately, is 183,000. When I'm concluding, I'll talk about what the president has spoken about later on. But we are saying, additionally, because we know now that we need a solar, included in the 183,000. So this house, it doesn't include the servicing of site. Let's say we are talking about a house whereby there is a stand. But when we include a stand, the stand is roughly 45,000. So I'm talking about only the structure of a house. So we are saying the IBT house that we need from the 1st of April, this is the cost that we are looking at, 183. And I know most of the people, they've been saying, approaching the minister, saying, Honorable Minister, given your subsidy quantum, we can give you this house. Then we are saying, additionally to the house, there is 20,300 for the solar system because we know about the electricity. We need the butler bus because we know about the robbery, which is 5,000, and the fire dust, which is 1,200. In rural areas, because we know the challenges that we are sitting with regarding the water, we are saying you are allowed to give us your rainwater harvesting device for additionally 9,500. So this is the cost, overall cost for a 40 square meter house. This is what we ideally refer to as a RDP house. We are going a step further, ladies and gentlemen. The people with disabilities, as human settlements, we are not leaving them out. We are saying we need to build houses that is for them. You can see, we are saying for these persons, we are building not a 40 square meter, we are building a 45. Because we need to put the rails, we need to make it bigger, the doors must be bigger. So you can see the price is 271. So if you were to build a 45 square meter for the persons with the disabilities, but you can see now, we are saying now we are expanding it further so that it is accessible. We are saying it's 271. Then you can include as well the home solar system, you can include the rainwater harvesting when we are building in the rural areas. The last one, the structure that we are building, is the one that I spoke about, that is funded from the Temporary Emergency Housing Fund. In terms of disasters, this is the one that we are talking about, quicker and faster. We know about the disasters that happened in Limpopo. We visited with the minister a village, Mbaula village. When we reached there immediately after disasters, those people, all their houses were swept away. Now, we need to respond. Now, we are asking our service providers, how long can you build us this house? Some of them were saying, can we have a meeting on Wednesday? It was a Saturday. I said, but people are outside. We are in a rural area. We wanted to take people to an immediate accommodation. In rural areas, we don't have those lodges, the bed and breakfast, and in that area, all those, we know what happened in the news, all the B&Bs, the safer accommodation, they were also swept away. The only alternative that we had to come up with was to build a temporary shelter immediately. But what does that temporary shelter consist of? It's not like what the colleague said yesterday, the iron shield, which is so temporary. No. It is, we have got the norms and standard of how a temporary shelter should look alike. 30 square meter. It must have roofing, it must have columns and anchors, it must have a concrete, it must have the doors, it must have the window, must have the flooring, which is concrete. The total cost of that temporary residential unit is 97,684. So this one as well, it is regulated. Now, I'm going to talk about what everybody, and yesterday the colleagues were saying the 2% is not enough. But remember, colleagues, we are starting. And to show that this is not a talk shop, when we signed off our grants frameworks and submitted to National Treasury. The grant frameworks are going to be gazetted. They are going to be part of the division of the revenue bill. They are going to be gazetted. We are saying a minimum. We are not saying 2%. I heard the colleagues yesterday were saying 2% is not enough. We are saying we are starting on the 1st of April. A minimum of 2% may be allocated to programs and projects for the implementation of the innovative building technologies. So it shows that this is not a talk shop. We are saying we are starting on the 1st of April. We are expecting the provinces to submit before the minister and the DG approves the business plans. We are going to see this 2% featuring in the business plans. We are not going to approve the business plans without the 2%. However, yesterday we were talking about the more importantly, we know that our communities, they don't want to change. So we have included there, we need to start. It was a topic yesterday that we need to start talking to the beneficiaries for them to accept this structure. I mean, our grannies, we are used to the ordinary house, that it must be brick and water and the roof and all those. The moment you come with the IBT, we need the local authorities, we need to talk. So community participation, it is critical, colleagues, especially the contractors of the of the IBTs. And we need community facilitators. We need the buy-in. We don't want to be building houses. At the end of the day, the houses are not occupied. The Auditor General will be knocking on our roof to say, this is fruitless and wasteful expenditure, because they're going to be vandalized. So we need the buy-ins of the beneficiaries, whoever is going to occupy that house, to say, I am willing to take in this house. So this is to reaffirm what we have been talking about yesterday, that in our grants framework, this has been submitted and signed off to go and be published. Now, we took one grant to say, let us look how much is that 2%. This is the MTEF, medium-term expenditure framework allocation for the next 3 years. We have, because as I said, the HSDG is transferred to provinces. We have looked at how much per annum will be transferred to each and every province. We worked out the minimum, which is the 2%. Out of the 13 billion that we are transferring to all the provinces, we are saying 265 million from the 1st of April 2026 will be allocated to the IBTs. So as I was sitting down, I said, okay, for year one, let me see how much units can we get. It's 1,500 units for all the provinces. So that is a start. If all of us and the provinces implement in year one, so you can see the allocation is going up. So next year, if we implement and deliver, the most importantly is to deliver these houses. If we deliver 1,500, then when we are doing the revision of the grants framework, we will be able to up that 2%. That is a promise. Now, in conclusion, yesterday, and as I said, we have seen, when we went to the Mbaula village, as I used it in Limpopo, and because it was on the news, the structures, all of the structures, they were submerged, they went out in water. What are we looking for as human settlements? The structures that can withstand, recover, and adapt to climate-related shocks. This was talking about yesterday. I won't dwell much. Cheaper, I have given you the subsidy quantums that we are working with that was approved. So what the IBT can give us, is it cheaper? Yesterday, the Honorable President spoke about the cheaper. Then quicker. As I said and gave an example that on Saturday, we wanted someone who can build us a house for the old woman who was outside. Then they told us about having a meeting first. We are saying we don't need a meeting. Can we get this quicker? When we say, can you build us 40 houses in Mbaula village, those houses that were swept away, because the traditional authorities there at that village says, look, I have got land. If you can send the Human Development Agency to come and value that land, you can build for me, because I don't want to take this community to there. I want to build them to this area. Now, we are looking for a service provider. Now, the service provider should be able, because when we went on Google, These are what we spoke about, that it takes 3 to 5 months to complete a house. But given the agency and the delivery that we want to do, because when you look at our business plans, we need to deliver a specific number per annum. So can those IBT houses be delivered in the space of 2 days? I'm told about the machine that can do it outside, and I'm told that it can be done. But this is what we are looking for. Program Director, I think those are my concluding remarks. Thank you so much.
Thank you very much, ladies and gentlemen. Please, let's give the Chief Financial Officer another round of applause. Before the Chief Financial Officer began to speak, I was actually missing her profile. Safe to say that she's one of the most highly educated civil servants in the government of the Republic of South Africa, holding a BCom from the University of South Africa and also a merit of other qualifications in finance and public management. Thanks very much, CFO, for that. And I think, CFO, what you are doing, you are actually resonating quite well with what the Director General has said, but also it gives an indication that there is confidence that government is injecting in the market. There's confidence that government is deploying resources in the market. As we know very well that infrastructure development becomes counter-cyclical in any economic turbulence. We know the macroeconomic outlook internationally. There's a lot of uncertainties that are there. And the confidence that the government of South Africa is injecting into the infrastructure development bodes well with other partners that may be there, whether it's from the private sector, whether it's sister agencies from all over the continent, that this train is not only about whether it is approaching the station or it is parked at the station. It has already left the station. It's either we are on board or in fact will be left out. The latter is not an option. Ladies and gentlemen, please do allow me to call to the podium Ms. Zandile Sibisi. Ms. Zandile Sibisi is with the Banking Association of South Africa, but she's also with Standard Bank Limited. She's got 14 years of experience in human settlement and also has been involved in quite a number of activities in development finance, development planning, property development, and settlement. I think in your program it says Ms. Sibia will be talking about the national anthem. Unfortunately, Ms. Sibia cannot sing. I want to make that disclaimer. On the back of the fact that Ms. Sibia cannot sing, she will then talk to us about the partnerships, the market confidence, and the relationship that we will have to be able to build between government and the private sector, particularly the Banking Council. And the good doctor, who's our coordinator, was saying to me this morning, we would like to hear more private banks, commercial banks, coming on board in terms of moving this forward. And as I indicated that the train has left the station, let's foster these partnerships. Please put your hands together, ladies and gentlemen, as we call Mrs. Zandile Sibia from the Banking Association of South Africa to talk to us about partnerships and strengthening the relationship as we look at the alternative building technologies. Our hands together. Thank you, ladies and gentlemen.
Good morning, everyone. All protocols observed. My name is Zandile Sibia. I definitely will not be singing the national anthem as per the printed program, and I'm definitely not Mr. G. Dlamini as per the program. That is my colleague. Unfortunately, he wasn't able to make it. He was here yesterday, but he will be joining us later for the signature of the social compact. So thank you very much for affording us as the Banking Association an opportunity to present our thoughts and ideas around the IBTs. Okay, I'm not sure if I can move here, but I can just request if you move. Thanks. Okay, so the Banking Association represents a number of member banks in South Africa and internationally. Within our portfolio, we are what we call the Division of Financial Inclusion and Public Policy. Within my portfolio specifically, we look at affordable housing and property. So we have a very close relationship with the Department of Human Settlements, as well as the relevant entities, your NHBRC, NHFC, PPRA, and the likes. So we do have a very, very close relationship. Specifically around affordable housing, we do understand that that is a very, it's a need in South Africa, and we do have a role to play. So in essence, we advocate for the views of the member banks. We look at lobbying for policy reforms, legislative reforms within that specific sector, specifically affordable housing. But specific to banking, obviously, there is provision of housing finance to that affordable housing market segment. I can safely say here that the member banks are very keen to invest in IBTs. But obviously, we note that there are systematic challenges in the sector that need to be addressed. Hence, we're here. And we're here to coordinate and work very closely with yourselves to find solutions for improving this market. I think we've been in the piloting stage for a while now, so we need to start getting, our hands dirty, implementing, and actually putting everything in place. And this one. Thank you. All right. So last year we spent a lot of time looking at requirements for IBTs and what we would, member banks would consider for those applications for financing. Aside from the typical requirements that you would understand for municipal, for general applications, looking at municipal approved building plans, the developer or seller contractor NHBRC registration, NHBRC enrollment of the property, compliance with the national building standards, service certificates and occupancy certificates. We understand those are typical of any development project. But we're also looking at additional requirements because this is an innovative and to some extent new technologies untested in some areas. So there are a lot of additional other requirements, your agreement certification and the technical reports, structural certificates, SABS certificates, specific registration requirements, quality control systems, confirmation of availability of building materials. This just speaks to, at this point, we note that there are no norms and standards specifically for this sector. And there was someone who mentioned yesterday that there's a fragmented framework, and we would appreciate at least specific norms and standards for IBTs, which will guide this sector. And these are some of the concerns or requirements that from the banking sector can be considered. Okay, other requirements would be the confirmation of the actual system to accommodate additions with ease, durability, maintenance requirements, the factory where the materials are manufactured, a list of site addresses, construction costs rate per square meter, client acceptance survey, community social acceptability study, site visits where necessary. Again, this speaks to how cumbersome at this point it is. What the member banks have communicated is that the applications for IBTs are very few and far between. and the process typically takes longer, you know. So while we're saying that, yes, there is appetite to accept those applications, there is that concern that we need to streamline this process. So let's find ways then together to find a way to streamline and make the process easier, and communicate. Education comes up again, which is very important. It came up yesterday. It is very important. But more importantly, for the affordable housing sector, as you know, we're looking at developers are saying it is getting more and more difficult to develop in this sector. Some developers are actually exiting the market. Affordability within the affordable housing sector is actually questionable at this point. I mean, even the end users are feeling the pinch. So if we can find a way, possibly through IBTs, to decrease the cost unit of delivering houses. I'm glad to hear that there is 2% that will be reserved in the HSDG for IBTs. But the banking sector would obviously be able to supplement investment into that sector to support the 2%. So we welcome those applications. So we've also, and I've spoken to it a bit, that there are obviously a number of concerns that we've raised, and we would like to put them to the table to the sector. So we've obviously realized that uptake and social acceptance of IBTs is a concern. There are actually more questions around the sector than, you know, answers, which then translates to low risk appetite, as you can understand. I mean, that is the nature of banking. But we also would want to understand or see work that looks into the suitability of products for affordable housing. I'm glad to see that also there are projects in infrastructure, schools and the likes, and hospitals where they are using IBTs. So that's a step also in the right direction. But also the lengthy turnaround times, as mentioned, that is also something that we need to look at. We do see maybe norms and standards and education in the system, and understanding what is required that would answer that issue. But quality and durability remains an issue. In the submissions received, that is still a concern. That is still a question. I think we would like then to start talking to Agrima, SABS, and see, you know, how do we close that gap. Also, other concerns are the costs of the products. The IBTs have been branded as cheaper, but are they really cheaper? Some of the member banks have found that they're actually more expensive. They're actually also limited in terms of availability of those products, which is a concern. And also, and this is, I have raised this a couple of times, there are serious concerns around the regulatory mechanisms in place, compliance monitoring of the sector. And we also need a clear understanding of the market. But in closing, what we're saying is the member banks are very, very keen to collaborate on IBTs with yourselves. So affordability is an issue. What we're saying is let's try and find a way to decrease the cost of delivering the houses. But I note the president yesterday mentioned that they should be cheaper, the proposals should be cheaper, but quality remains critical and at the heart of it all. Thank you.
Thank you very much, Ms. Sibia. Please, let's give Ms. Sibia another round of applause, ladies and gentlemen. I think the key message is very clear. Dr. Moss, the banks are keen. For me, as an ex-banker, the deal is sealed. So all what we need are the tombstones. You know, Mr. Ken from Nigeria will tell you that in the banking sector, when you close the deal, you mount the tombstones. You know, so that's all what we need. So also one critical message here is that the government building confidence in the market, it's also going to be a pull factor for the private sector to be able to come in and play in this particular space. For me, it's quite easy. Banks are risk averse, But the quicker the project is delivered, the lesser the risk. So there is no reason whatsoever why government should not be lining up with the department and saying, how do we partner? What pipeline is there that is critical and credible? What pipeline is there that is in fact genuine and bankable? So on that note, ladies and gentlemen, please do allow me to call to the podium Ms. Tsulufelo Ramotsewa. Ms. Tsulufelo Ramotsewa works for the institution that I'm part of, which is the National Housing Finance Corporation, with over 20 years of experience across development finance and the built environment. And Ms. Ramotsewa has got a Master's of Business Administration from the University of Stellenbosch Business School, and also an MPhil in Development Finance. She is an executive for lending at the National Housing Finance Corporation. So she will in fact engage with us on how concessional funding could actually be deployed, what appetite would be there in government in terms of realizing this particular vision. Ladies and gentlemen, please do allow me to call to the podium the executive for lending in the National Housing Finance Corporation. Thank you.
Good morning, everybody. All protocols observed. My name is Tsulufelo Ramotsewa. I hope my presentation is up. Thank you for that. Thank you to our board chair for that lovely introduction. My name is Tsulufelo Ramotsewa. As the board chair has mentioned, I am the executive manager of lending at the National Housing Finance Corporation, primarily responsible for coverage and deal origination. In terms of today's presentation, in terms of today's presentation, I will take you through a very quick overview of the NHFC. I know we had a discussion to say this is not a sales pitch, but I think it's important that you understand the context of how we operate, where we operate. So I'll give you a quick overview of the NHFC. I'll give you a quick overview of our product offering, and I'll also delve into the problem statement, the risks and practical mitigants that as financiers we recommend, and we'll explore various financing mechanisms. In terms of the NHFC, I won't delve into too much detail. However, the NHFC has been around for quite some time. We were established in 1996. We are a Schedule 3A entity, a public entity under the Department of Human Settlements. Our target market is developers, contractors, social housing institutions, other delivery agents, as well as student accommodation providers that are operating in the affordable housing space. But the end users of our products are households with monthly incomes of up to 22,000 rand. So that's the space in which we operate. Our product offering, of course, provides innovative finance solutions in the affordable housing market. I won't go into too much detail, but in terms of our product offering, we provide wholesale financing to social housing institutions, to private rental, which includes student accommodation. We bridge developers that are building to sell. We also bridge contractors that are appointed to build BNG units. We also provide incremental housing financing, and that is particularly to non-banking intermediaries or your microfinanciers who would then on-lend to people that are building their own homes. We also have other activities, being that we also do strategic investments where we invest in strategic organizations. We put equity in strategic organizations that has the same mandate as the NHFC. We also have strategic partnerships, program management that we offer to local authorities. And lastly, and most importantly, we are also the implementing agents for First Home Finance, one of our flagship programs within the NHFC. We are the implementing agent on behalf of the Department of Human Settlements. To get into the problem statement of today's discussions, what are the funding opportunities that enable effective implementation of IBTs in affordable housing? Now, we've taken a slightly different approach in today's discussion in that we have looked at, we thought, let us take this opportunity for us to understand our individual needs so we can co-create financial instruments that are fit for purpose and create financial viability. As you would note, that financial viability becomes quite a big discussion point between IBT providers as well as financiers. As a result, we'll explore practical approaches in terms of risks and how we would recommend some of the mitigants to address those risks, particularly in the IBT financing, and to make it more attractive to financiers. We will also explore the various mechanisms utilized in various African countries to promote financial viability. In terms of the common risks, we'll look at the common risks and mitigants, but before we do so, again, it's an opportunity as the IBT suppliers as well as the financiers to give you a sense of what financiers generally look at when they are looking at financing transactions. We're just highlighting at a very high level some of the credit elements that are looked at by both development finance institutions as well as commercial banks at varying degrees, of course. You would note that development finance institutions would give more latitude than commercial banks would. But in essence, in terms of these credit elements, we're looking at character, which of course we gauge the reliability and trustworthiness of the projects and the systems that we are financing. We look at the capital, is the business well capitalized, or if it is an SPV model, are there sufficient cash flows? We look at the capacity, is there growth potential, and is there ability to be able to meet the loan repayments? We look at collateral, which is a form of insurance for the lender ourselves. And lastly, we look at conditions, economic and industry conditions, etc. And then really with that backdrop, it allows us to then It allows us to then move to some of the identified risks that financiers would pick up and some of the more suitable mitigants that would be applicable, particularly in the IBT space. You would note that the common risks associated with new technologies and IBT specifically are highlighted here. And this slide really goes to address some of those mitigants and the expected some of those risks and expected mitigants from funders. Firstly, we will always hear when we are dealing with new technologies, risks related to high upfront capital costs for IBTs. And the recommendation there is that as a mitigant, we need to do bulk procurement of IBT units to reduce per unit costs through scale, and it lowers initial capex hurdles without compromising long-term affordability. Another risk that is always highlighted with new technologies is the perceived technology risk, because the technology is not well known. The mitigant for that, of course, becomes blended capital structures with first loss facilities. And this is where technology risk is then absorbed by your junior facilities, your concessional tranches, and this is your junior facilities being your junior funding, your MES, your donor funding, your concessionary capital, as well as your equity. Another risk that is always associated with new technologies is execution risk, and that can really be mitigated by demonstrating the value proposition of the IBTs in terms of cost reduction, in terms of speed to market, in terms of energy efficiency, as well as life cycle costs. Another risk that is very common in terms of new technologies has to do with limited developer balance sheet. I think we had some of the providers here on stage yesterday. Some of them are established. We noted that some of them have been in business for 40 years and some of them are still starting out. And so the limited developer balance sheet becomes a challenge in terms of financiers looking at these transactions. And how we can address that is to make sure that we create SPVs or special purpose vehicles where we would then ring fence these projects from developer balance sheets, enabling off-balance sheet financing where we focus on the cash flows of the development itself. Some of, again, more risks and how we would then mitigate these risks. There's risks that are associated with operations and maintenance risk that might lead to underperformance of the asset. And the mitigant for that really is that part of the conditions as financiers, we would include maintenance reserve accounts. We would include, or we would make sure that we embed O&M contracts with the system providers so that we are making sure that we are taking care of the performance of the asset. Another risk which is always raised by financiers, residual value and asset liquidity risk. Essentially, this is the uncertainty about the resale value of the IBT technologies or of the projects that are built with the IBT technologies. And really, to mitigate that, we need to standardize valuation methodologies for IBT assets to create predictable exit pathways for lenders. And this is really one that is not necessarily for the suppliers, but more for the value chain. So this speaks to our valuations, this speaks to our valuers. Are we standardizing the process of valuing the IBTs? Another risk that is always comes up has to do with insurance and warranty risk. And that is that we've seen that premiums tend to be prohibitively high when you come with an IBT technology, and really a mitigant to that is that if you have a manufacturer-backed performance warranty, this tends to assist where that is concerned. And really the last one in terms of some of the risks and mitigants is that practically we do experience or we note that there are possibilities of cost overruns, and particularly in terms of a learning curve risk. And to mitigate that risk, it is important practically to ensure that we've got fixed price contracts and sufficient contingency allowances. These are just some of the practical examples that we are putting in place. As the board chairperson has mentioned, we need to leave here today with practical solutions and practical ways forward. And I think from a financing perspective, those are some of those practical mitigants that we can put in place. We are then exploring some of the various financing mechanisms that are utilized in different sectors, as well as in Africa, that create these opportunities. We'll focus only on 4, which of course increase financial viability. As mentioned, that then becomes a key component for a financier. These increase financial viability. It has to do with credit guarantees. We're looking at material linked finance. We're looking at PPP blended finance, and we're also looking at green or climate financing. In terms of guarantees, you'd find that institutions such as InfraCredit Guarantee in Nigeria utilizes credit guarantees, particularly when financing various types of projects, including IBT-related projects. What are these guarantees? It's a risk-sharing instrument where a third party agrees to cover part of a borrower's repayment obligation if they default. How is this mechanism utilized? A credit guarantee facility reduces financing risk for developers building affordable housing, particularly with IBTs, and developers borrow construction debt and pay market rates, but a guarantee from institutions such as InfraCredit then is able to back that debt. Why then is this particular mechanism important? It becomes important because guarantees reduce the lender's hesitation to finance projects using innovative materials, because the credit risk is therefore mitigated, therefore bridging that first loss gap that often blocks IBT adoption. We also looked at material linked finance. This is utilized in the Gambia through block banking. What is it? It's linked financing models where material production and housing financing is integrated. Lenders advance credit tied to innovative material manufacturing, which directly supports construction costs. Now, how is this mechanism utilized? Local producers of innovative material participate in financing schemes where material inventory is financed by the same financier as the financier for the developer. Why does this become important? It becomes important because this reduces the working capital constraints for developers who are therefore utilizing the cost-effective or alternative materials. We also looked at green financing. We would note, I met a colleague from the IFC this morning and yesterday. We would note that the IFC has a lot of facilities that they've provided in South Africa, both to DFIs as well as to commercial banks. And with the IFC, what exactly is that? The IFC partners with commercial banks as well as DFIs. And although their funding is mostly focused on green construction, inherently supporting developers using IBTs, but it inherently actually supports developers that are using IBTs, because IBTs, of course, as we know, overlap with sustainability, resource-efficient materials, and building methodologies. How is this mechanism utilized? Generally, it would be a provision of senior debt, and that is performance-based incentives. These are dispersed based on predefined matrix, such as energy-efficient materials, such as water saving, and such as resource-efficient materials. Why does this become important? It becomes important because it makes it cheaper for the developers to gain access to that funding, and cheaper for the developers to adopt IBT technologies. Lastly, we looked at triple P blended financing. And this, of course, has been utilized in various sectors within South Africa as well as outside of South Africa. In the IBT space, it's been utilized in West Africa, where we've seen a triple P blended financing model between IDA, IFC, UE, MOA. What exactly is it? These are public-private partnerships with blended financing. And how are these utilized? These are utilized in a manner where financing is pooled that comes from various sectors, or rather various providers, and these includes donor funding, it includes DFI blended financing, it includes, sorry, I did not move. It includes DFI blended financing. It includes concessional capital, which becomes important from a financial viability perspective. It includes guarantees, and of course, it includes commercial funding that is coming from commercial banks. This is important to de-risk investments in affordable housing, including IBT applications. Why does this become important? It becomes important because it provides concessional funds which improve risk-return profiles and risk sharing with private investors, therefore encouraging commercial bank participation. Colleagues, that is it on my side, but what I would like to say before we close is that as the NHFC, we are open to engaging with you so we can co-create financial solutions for financial viability and also to increase funding opportunities within the IBT space. If you'd like to have a conversation with ourselves, we do have a stall outside as the NHFC. There's a stall for the Department of Human Settlements, and the NHFC is seated there as well. Thank you very much.
Thank you very much. Once more, a round of applause, ladies and gentlemen, for Ms. Sulu, I think, for the wonderful presentation. Please allow me to take this moment to welcome our Honorable Minister. She's here with us. Ms. Tembi Simelane is very passionate about human settlement, the funding, and very erudite. We always honored, Honorable Minister, to have you. Ladies and gentlemen, I think what is quite clear is that there are two things before we move to the next speaker. Is that there is concessional funding that needs to be deployed in terms of realizing this vision. But also the biggest challenge that is there, and I hope that Dr. Ngobeni will deal with it, like Ms. Sulu has done. Let's define this concessional funding very well. You know, in the money market or in the capital market, the pricing of capital is done in the following way. One, there is M1, M2, M3. Money 1, money 2, money 3. Money 1 is when the money is printed by the central bank. Money 2 is when it goes to the commercial banks. M3 is when it goes to either wholesale funders or it goes to the clients. Now, many commercial banks would borrow money from the central bank, then add their interest, which in South Africa you call it the prime rate. which is 3.5%. Then they will borrow because that provides them a cushion for whatever risk. Development finance institutions do not carry the same burden of borrowing from the central bank and get an interest loaded into their capital. So their cost to capital, because the money comes from the state, is zero. So therefore, my challenge with everybody here, Minister is here, Mr. Moss, as well as commercial bank and development financiers, is that the pricing of our capital must move away from what commercial banks are doing by saying, let's use prime as a reference rate. Because the cost of capital for development finance institution is zero. Because it's an injection that is deployed by the state. So when we talk concessional financing, let's move away from prime as a reference rate, because that will make it easy for us to deploy the capital. And secondly, ladies and gentlemen, as I call Mr. Ngobeni to come to the podium, and I'm hopeful that he's going to be able to deal with this, how do we also club together with other financiers from outside South Africa, commercial banks, as well as development finance institution? One of the risk mitigants is also to form syndicates, because when we form syndicates, you are able to spread the risk evenly, to all the participants. But I'm hoping that the colleagues will be able to do that. And before I call Dr. Ngobeni to the podium, I've got a very important message that I need to be able to share with the colleagues. Firstly, accreditation tags should always be clearly visible to all the participants. Please, if you do not have your accreditation tag, please put it on now. Please do not leave your personal belongings unattended. And it then says, thank you at the end. Ladies and gentlemen, please allow me to call to the podium Dr. M. Ngobeni. Dr. M. Ngobeni is the Managing Director of the Infrastructure Fund. He's got 20 years of experience in the public service, including 11 years in the National Treasury, specializing in public finance and strategic partnerships. He is also with the Development Bank of South Africa, responsible for strategic partnerships and originations. He holds a PhD in public finance from the University of Pretoria, a BCom degree in economics, as well as all other trainings that he has received from various institutions, including the International Monetary Fund. Ladies and gentlemen, please do put your hands together as I call to the podium Dr. Ngobeni.
Thanks, Program Director, Honorable Minister, Tembis Milani, all political principals present here. I saw the DG, other senior officials within government and the private sector, all protocols observed. My name is Mesaben Ngobeni. My father likes to call me Victor, but my mother calls me Mesaben, so I side with my mother. My presentation is very short. I'm going to answer the questions that I've been asked to answer. I just want to figure out if this is what I'm using to move the slides. Okay, I think I took it out. I'll try to bring it back. Yeah, I think we are good to go. So the Infrastructure Fund is an innovation of government. It has been formed by Infrastructure South Africa, the National Treasury, as well as the DBSA, through a tripartite memorandum of agreement that was signed in 2020. And it's a presidential initiative. The reason why the Infrastructure Fund, or the IF, was established was to use public funding to crowd in private capital at scale. So essentially, we are doing projects that are 1 billion and above in terms of capital costs, and programs should be 3 billion and above. However, you are able to package innovative and bespoke financing solutions that can solve for quantums that are lower than that. So capital costs, very high, large projects, but financing solutions can range from 100 million going forward. We are currently located as a ring-fenced unit within the DBSA for operational purposes. We are leveraging on their corporate infrastructure. From the 1st of April, we are morphing into an institution that is called Infrastructure Finance and Implementation Agency, or IFISA, which will be housed within the National Treasury. Currently, Treasury and the DBSA, they are funding our operational costs 50% each. However, our investment mandate is coming from the National Treasury. When we were established, they set aside 100 billion in provincial allocations, where we use this 100 billion to structure various funding and financing instruments, which I will talk to in a while. This slide is very important for the discussion at hand. By blended finance, we mean the confluence of public and private sector funding. So basically, we can craft grant instruments. We can also craft long-dated debt instruments. In other instances, short-dated instruments like bridge facilities. So depending on the project and its requirements and the science behind the financial modeling, we are able to put in these various instruments in. So in respect to what the chair was asking, from a pricing perspective, it really depends on a particular project. But given that we are seeded and funded by government, we are highly concessional in providing our facilities. And concessional, we define it by the tenor of the loan. We hold long-term in most cases, very patient capital that we are providing. So where other traditional lenders would want to hold for about 15 years or so, 20 years, we are able to hold longer than that, understanding that this is public infrastructure that is benefiting the people of South Africa, but also noting that the cost to our funding is minimal. Not that there's no cost, it's very minimal, given that we are funded by government. The other variable is around pricing. Where required, we are able to model very novel instruments that are, in some instances, not interest-bearing, almost mimicking a grant. In other instances, it's a pure grant itself, especially where there's a huge strand of social users in a particular project. But where we look at the project and the financial modeling is making sense, the project is able to stack up, wash its face, and stand up by its own 2 feet. We then charge as required, as per the model. So mostly the prime rate will be the benchmark, but that is for mostly commercial projects. So in short, our model is combining these various instruments for different projects using that 100 billion that I have spoken about. This is our value chain. So what we do is most of the projects that we put forward to National Treasury, so we access that 100 billion through a facility called the Budget Facility for Infrastructure, which is a reform in government that looks at mega projects for government. We register these projects with Infrastructure South Africa, so our sourcing strategy could be direct engagement with potential sponsors, or ISA itself recommending projects to us, or institutions like National Treasury looking at the projects that were submitted before, and they can see that they fit the profile of the infrastructure fund, then we look at them. So in other words, ISA aligns our projects with the national planning agenda in the National Development Plan. And once they're happy with that, we start with the science around project packaging, program packaging, most importantly, which is core in our mandate, is 2.2 there that you are seeing, which is project design and structuring. Step 3 just encapsulates what I was talking about in relation to the budget process. So this BFI story, you can only unlock that 100 billion through the national budget process. And often when we engage with sponsors, we get inputs that sometimes projects are in a hurry to reach financial close. So to wait for a yearly process of government to unlock the funding could take long. So the reason why we are now moving into IFISA that I spoke about is to try and fast track some of those processes or eliminate some of the inefficiencies that are vitiating our progress. I also need to indicate that when we work with sponsors, and sponsors I mean organs of state in the national, provincial, and local government. So it can be national departments, it can be provincial departments, municipalities, or their entities that are responsible for infrastructure development. When we work with them, we do not accept the powers that they have around procurement and implementation of projects. We actually complement each other. So it's a national program that supports the mandates of these institutions, and collectively we need to procure solutions that are bespoke, that are working, that will exude confidence in the market to be able to crowd in private sector. So it's more about putting up instruments that are able to de-risk these projects to ensure that they quickly reach commercial and financial close. So obviously, the sponsors will deal with the implementation and have their own monitoring systems. In the IF, will be monitoring the instruments that we would have created as an institution. So since inception, what we have done so far, we have unlocked about 51 billion from that 100 billion that I was talking about. So they still had room to be able to support more projects. And the reason that we are here today is to actually extend our availability to the sector. We already have a memorandum of agreement with the National Department of Human Settlements and respective entities. And we are saying, as you are exploring these alternative building technologies or IBTs, we are available to actually assist you in catalyzing. If you look at the presentation that was delivered by the CFO of the department, you can see the baseline as a start was about max 300 million. If we want to make significant progress, we need to tap into these resources so that we can scale up very quickly, but also ensure that we crowd in private capital. So that is the value proposition really from the infrastructure fund. The other issue that I need to talk to is around the readiness of these projects, preparing them and ensuring that they do meet the master of the BFI, because often we think that money or the lack thereof is the problem. But in projects where we are extending, you actually find that non-monetary variables are the ones that are stalling the projects to be moving forward. So overall, since we started, we have about 26 projects with a capital value of 130 billion. And these projects, we deploy various instruments. And as I go into the next slide, which I think will explain exactly what we do in various projects. It's a bit small, but I'll try to talk about one or few of these projects so that you can see how we deploy our instruments. You can see the largest project in the pipeline is the Umkomazi project in KZN, about 25 billion. That project, we went to the Budget Facility for Infrastructure, or BFI, to unlock 12 billion. That 12 billion, 6 billion is a grant, Chairperson. Grant, non-repayable, 25% of the capital costs. Its purpose was to fund the segment for the indigents, as I indicated in the preamble. Then there is a 6 billion non-interest bearing concessional loan facility to the TCTA. The purpose of that facility was to lower the cost of tariffs. The project, when we came in, was stalled. eThekwini didn't want to sign off-take agreements because the tariffs were very high because of the time lapses and escalation in capital costs. The injection of that blended finance solution of 12 billion ensured that the tariffs go down and the project is affordable. It has now been banked. Actually, it's now raising the rest of the 12 billion from the private sector. So this explains how we bring about the blended finance approach into projects. The most relevant one that I can talk to is the social housing program that we are also having there. We looked at the social housing program and said, what can we do to ensure the bankability of this sector? We then said, okay, because the commercial lending segment was not too keen to play into the sector, not that they are not playing, they are playing with limited risk exposure for obvious reasons. We said, okay, we need to look at the program where we come in with government funding and provide concessional financing. And we provided very concessional financing to 2 social housing institutions where they were even prime less, I think 2% or 3% to make the financial models work. But we also played a role of hand-holding them in taking them through the financing process, the entire DDs that you do in the technical, legal, financial, and technical space to ensure that the projects actually work. And in this sector, we paid a lot of school fees where we had to understand why these projects are not working. And in that, you have to restructure even your facilities that you have given. For example, in one project where we thought we'll be giving about 400 million, we ended up giving about double that amount. And the reason for that was to deal with cost escalations, issues pertaining to VAT, and issues pertaining to slow tenanting in the sector. So as a financier in that space, you almost have to look at your interests, but also wear a very soft heart toward those that you are supporting. So that is the intervention that we have done. We also packaged a solution around bulk infrastructure provision within the Lufereng program, where we were augmenting the urban settlements development grant that the department sends to the city. It's about 7.7 billion. So the project would be implemented over a 10-year period. But because of the BFI catalyzation effect, the project is now being implemented over 5 years because we are now shortening the capital requirements. Remember, with the normal allocations, your budget will come in 3-year cycles. But with the BFI, we go and get the approval now, and you get the catalyzation happening almost within one single MTF. So that is the catalyzation effect that we are talking about. This slide I won't talk to, is just talking to the issues around our other projects that we are looking at. I will also not be talking too much to our team structure. Suffice to indicate that the IF is a blended finance platform, ready to do business. We want to partner with the department to be able to ensure that the IBT intervention works better. You can see a very strong strand of public service as well as private sector professionals combining to ensure that these projects do work. This is essentially the structure. if you are willing to engage with the IF, you can come and talk to us. You can see the head is Mr. Mohale Rakate, supported by the 5 units that you are seeing there. Basically, project development, which is the section that I'm heading. There's technical, Sifishi, that's engineering. The engine is in the middle, that infrastructure finance. This is where the structuring of the financial solutions is actually happening. Asset management, they are managing the assets that we are creating. And obviously legal is the glue that binds everything, where they're doing a lot of contracting. So that is, in short, the length and breadth of my presentation. The infrastructure fund is open for business, and we are willing to support the sector to reach its intended objectives. Thank you.
Another round of applause, ladies and gentlemen, for Dr. Victor Ngobeni. Doc, I'm not trying to wage any war in your happy home, you know. So, ladies and gentlemen, I think that brings us to the end of these incredible presentations. I will then open now engagements from the platform, which is going to be interactive. What is our takeaway this morning as we identify the hands? Can I also get an indication from the colleagues who are coordinating the mics that they are, all of them, they're on standby, you know, for engagement? I am actually recalling the discussion that I had yesterday with Mr. Thino Habib Han from Shelter Afrique, yeah, from Nairobi, when we're talking about how do we club together and leverage this finding, you know, and when we do that, we'll be able to reduce the risk in terms of the capital exposure from different funding houses. So that is one thing that must be kept in mind, colleagues, that sometimes when technology is being introduced, the biggest thing is risk, and how do you mitigate that risk? You know, also pulling together resources becomes also a risk mitigant. And I just recall that conversation we had. There is a hand there from Prof. I think, ma'am, please, there at the back, yep. No, there, you are passing, there. Prof. Mbang, thank you.
Thank you very much, Program Director, and thank you also to the presenters for these insightful presentations. I will start with the CFO of the sector. The budget quota of 2% I understand the issues of intergovernmental relations, but I think we would appreciate that to be a little bit firmer as a ministerial pronouncement to a must. And we accept that it's a minimum a budget, but May is a little bit problematic. The question that I would also just want to pose for clarity, the UISP, the grant for information upgrading, goes to the metros directly. Does the 2% quota also applies to the UISP program itself? One other issue, in terms of upscaling IBTs in PNG houses in the rural space across the country, you recall the point I raised around yesterday around there is an opportunity around the VIPs. I think it might need to be looked at. Are we continuing with them, even in areas where flooding disasters are hitting? You recall that alone has been a problem because it's a substandard solution which can contaminate the groundwater. We have been employing it as not a full standard anyway, but we've got an opportunity at this stage to change that to a full standard in terms of the urine diversion and dry sanitation systems, which means that within that program alone, or that component of the BNG, we are likely to just go full-scale IBT. My last issue, Dr. Ngobeni and maybe Tsulu from NHFC, is it possible to better package the subsidy program, the 2% plus a quota at a national level, for us to be able to attract other funding investment. There is an elephant in the room. I think we need to speak the truth to ourselves. The upfront costs of IBTs are higher for various reasons. Issues of scale and access to materials and the like. We know that. Zandile has confirmed that I'm from PASA. That is a truth that we're aware of and will be living with. It is clear at this point in time that we need, therefore, to have top-up funding or a financing model that will ensure that that product portfolio for the next 3 years is packaged differently. Decentralizing it to provinces and metros is still good, but within a centralized financing model, bringing it together. Is there an opportunity within the blended finance models to repackage the IBTs in the HSD and HSDG? Thanks, sir.
Thank you very much. Next hand, please.
Good morning, committee and everybody, all the delegates. My name is Etienne. I've been involved in IBT for the last 20 years.
All right, Etienne, let me recognize you, please. Thank you very much. Please proceed, Etienne, so that at least you're able to manage the room. Please proceed, Etienne.
Thank you, thank you. I would like to address two main issues. 2% of the total national budget, if it is scaled down to a province level, works out to 166 units per province. That does not include the municipalities. It doesn't become a viable option for an IBT or an ABT to do it. As the honourable member said earlier, the initial cost of setting up a site is quite high. So any IBT system is, for it to become a viable business model, is based on volume. And to issue 166 units per province doesn't become viable for any certificate holder. The second point I'd like to make is regards to the time frame. IBT is not necessarily a quicker option. You follow national build codes with regards to thermal efficiencies, structural integrity, all of those. Yes, you can print a house in 8 hours, but there's still drying time that's required. There's still finishes that need to happen. Roof needs to go on. All of those kind of issues that add to a continuous build time, and at the end of the day, you're not going to get a house in 3 hours. Thank you.
All right, thanks very much, Etienne. We're moving to this side. There's a hand here. Please assist, Mike.
Good mornings.
Okay.
Yes, please proceed.
Good mornings. I'm Dan Bowman, certificate holder of company Didutex. I want to align myself with Etienne, but also on a concern. Whilst there's a concern of acceptability by residents, there seems to be a doubt within the government institution itself. You listen to the financial packaging here and a commitment that is being given by human settlement on 2% only, given the housing backlog they are confronted with. There seems to be either human settlement is in doubt of the product availability to expedite housing development. They're questioning it themselves, but yet a state organ, Agrima, certifies us that we are compliant to all build regulatory aspects. Furthermore, you listen to, I'm a simple business, I'm a contractor. I don't have your PhD degrees, but I was able through my IP develop a solution. Now, that's it. All these, excuse my layman's opinion, mumbo jumbo that's going on, when a department approves a contract and says, here's a contract to Didutech to build 500 houses, why must I go through all the bureaucratic processes of financial institutions about guarantees? Is it not just to take the contract that comes from human settlement and say, finance this thing that I can be on site in 2 weeks' time, period? Don't subject me to all your bureaucratic processes. You understand best how to bring this thing to the end point where I am enabled financially with my limited contribution. If the project is 35 million or 70 million, I say, here's my 10 million. I need your 30 million. Come on board. Ladies and gentlemen, we are complicating these issues. Yesterday, we've appealed and made a submission to you, to the panels. We don't know who is being consulted in what private rooms, but as certificate holders, the contractors that can deliver the products, we have not been spoken to. We are therefore been proposing and again reaffirming, we as a certificate holders want an association that you can talk to us. All these concerns that have been raised here by BASA, trust me, talk to us, we'll expedite the process much more clearer about how to get this thing on the ground, and the masses of the poorest of the poor who are waiting for houses can get houses. That's my submission.
All right, thank you very much for that. There is a hand there.
Okay, can I also come in? My name is Promise Makanya. I'm just making a plea. I'm listening to
Promise,
all
where are you? Where are you? Where are you? Because I had recognized a gentleman here. Promise, you will come in. I can assure you we're going to move and calm the room to that direction. I know your contribution is worthwhile. There's a gentleman that is there and here, and then you'll come in, madam, please, if you don't mind. Thank you kindly.
Greetings, everyone. My name is Tsandam Kize from Siaspana Construction. My question is directed straight to NHFC. I need to know if NHFC does assist with EIA while processing your application, or you need to come with that IEA certificate before they process your application. Thank you.
Okay, thank you. The gentleman then promise after that.
No, thank you very much, Program Director. My name is Posane Mngcebisa. Let's welcome the presentations. I promise you I'll be very short and to the point. My first question is directed to the CFO of the department. We welcome the presentation, and I think it is clear that the problem is not the shortage of resources by government. Because as the department, you give money to the provinces as metros. The problem is with that use of money by the provinces as well as metros, because many a times the monies that are allocated by yourselves as the department gets returned. And that on its own becomes an economic conundrum. So how are you, because it's not a new issue, but how are you dealing with this issue of expenditure by provinces and metros on the grants? Because at the end of the day, those monies must be used, on the ground. So I just want to know practically what the plan that the department has, so that these monies are used for what they are meant for. Number two, BASA. Of course, it's an association of private banks that are sensitive, to credit. But I just want to know, that do you have a deliberate program on dealing with the missing middle? Because the missing middle in the main will be those teachers, nurses, policemen, who are, in terms of credit, are too risky for banks, to be given credit. So I just want to know that, because these presentations are nice, but until they are implementable, and until they are here, the industry says, yes, we are ambassadors of what we are saying. they'll just remain, nice presentations. So I just want to know, as PASA, I'm talking about this sector of the missing middle, because that's the problem that we have as the country. And lastly, Tsulu, in your presentation, which is, I'm very impressed because I'm also from the DFI, I didn't get your plan on post-investment, once you have given the monies and so on and so forth. Thank you very much.
All right, thank you.
Good afternoon. Good morning, ladies and gentlemen. My name is Oscar. My surname is Amol. So sorry, Program Director, I was raised the hands long ago before others. Because we don't see us at the back.
Okay, colleagues,
Yes.
let's recognize you. You will have the opportunity. If we don't do that, we will degenerate.
Okay.
Please, colleagues, please.
Okay.
All right. Okay, please proceed. Then we'll have Petunia and the gentleman that the lady standing next to.
Okay.
Then we'll go across. Everybody will have an opportunity. Please proceed, sir.
Okay. Good morning, everyone. My name is Oscar. My surname is Mola. My company is Sufficient Grace Trading and Little Trading Enterprise. My question is why? What is the time frame for your loan and the grant? And then what are the criteria that you use to finance the project? And then in terms of the project, how do you accept any size of the project, regardless what industry in construction you are playing?
All right. Thank you very much, sir. Petunia, please proceed.
Good morning. Donovan Goliath from the NHBRC. I think I've got a broad question, and anyone on the panel can, because it's really directed at all of them. IBTs have been around for a while. If I listen to all the words that have been used, it sounds as if it's still being treated like early stage risks. Now, if there's a gentleman in here who says, I've been in this industry for 40 years, in the IBT industry for 40 years, why does it sound as if the financiers and the funders all speak about this as if it's early stage risks? Can't be anymore. Also, the language being used is not entrepreneurial friendly at all. You don't speak to the entrepreneurs who's driving this process. If you increase your risk aversion, get rid of the word innovation altogether. Risk aversion kills innovation very quickly. I've worked with entrepreneurs for more than 40 years. As soon as you speak risk aversion, out goes innovation. People are less innovative. They don't want to. In entrepreneurship, we teach people to fail fast and fail often. If you don't have the funds, you can't do that. We also speak of, proof of concept. IBTs have been proven long time ago. There's no need for an MVP anymore. The real issue is innovation accounting. It does not exist. Traditional accounting, repackaged as if it sounds different, is all I hear. It's not innovation accounting. So it's very traditional. You have to change your ROI metrics so that it becomes learning-based metrics, and move away from ROI when you deal with innovation. Requiring profitability in the short term is not going to work. That is exactly why angel investors and angel funding in South Africa essentially does not exist at a large scale. very, very few. People aren't willing to take a risk and say, listen, here is something that could create vast changes. Let's put the money in there. Let's take the risk of losing it, because the risk of it succeeding is actually what we are after, not the risk of it not succeeding. We need to find champions to drive this. Those champions are the ones that must be funded so that they can prove you wrong. We've got to calculate our risks differently. Instead of focusing on operations, shift the focus to innovation. Those are two completely different concepts. All I hear is, I see all those plans and I see operations. I don't see anything speaking to innovation over there. And then lastly, there's a cultural shift needed. That cultural shift means our thinking needs to change to encourage innovation. Our thinking needs to change to a model that encourages vulnerability. We need to quickly as possible reframe failure as finding out what will work. This term failure has been branded around and used not to fund people, because you've seen that fail, you've seen that fail. You are learning as you are failing. And if you change your thinking model to reframe failure as finding out what is going to work, then possibly we are on to that. So how do we encourage innovation if we remain this risk averse? That's my question. Thank you.
All right, thank you very much. There's a gentleman here.
Good morning. My name is Billy Mlambo from Sipila Sonke Academy. I think maybe one of my comments is this. For Chief Director, it's not encouraging the amount of work that needs to be undertaken right now of about 1,500 units. So for me, for a startup, there's a verse in the Bible which says in Zechariah 4 verse 10, don't despise the days of small beginning. So, but for acceleration, for the gentlemen who have been there for more than 40 years, I think we need what to do. It's an acceleration in terms of IBTs. So I would say, because it is as if people, they don't know about these IBTs. I would say for DHS to accelerate this, can you also put more adverts on IBTs so that people, ordinary people, will come and join along, so that it's not like this thing, it's a risk that people are taking risk. So we need more advertising as a product. Then secondly, I think there's a lady, I think it's from National Housing Finance Corporation. It talks about regulations. I'm not sure whether it's talking about, she was talking about regulation from the municipality level, because if we have read what you call Township Economic Development Act of Gauteng, there is an area that talks about that municipalities need to come with bylaws that is on economic development in terms of the alternative technologies. So I just want to find out from that. Then lastly, on Victor, on infrastructure development, we know as ordinary people on the ground there, and also as business people, we have projects that some of them, they don't come from government. We might not be having money, but I'll give it, just for instance, we've got about more than 667 hectares of land that needs development, which will put about more than 15,822 housing units. I just want to find out, in those instances, how does infrastructure South Africa come in? Thank you.
All right, thank you very much. Colleagues, please do allow me to recognize the presence of the Deputy Minister, Mohammed Shala, as she has joined the summit. Welcome, Deputy Minister. Thank you. Please proceed, colleagues.
I just want to come in. I just want to ask, to make a plea to the minister. Minister, women, can we also partake in this stake? Because the president last year promulgated the law for public procurement for women. We've got women organizations, Minister, and you are the only ones who can save us. We've got SAWIC, Women in Construction. We've got WECONA, which was established in the office of the president. So those people who have got skills here, can they empower us, Minister? Because I promise you, we will build these houses and we are going to be the best. But can I also ask the CFO? CFO, you've got the law in your hand, as well as human settlement. Can you put in your tender to say whoever is going to get a tender is obliged to capacitate or incubate women, because there is no one who is fighting for us. Can we also partake, even those, we are also asking those who have got skills in IBT, involve us, because we are capable. Please, that is the only plea that I'm asking. Thank you.
And I think it's a fair plea. Please proceed.
Hi.
Yeah, please proceed. Yeah.
Okay, thanks for the opportunity, Chair. My name is Duduzi Farai Mwamba. I've been in the IBT industry for the past 10 years, and I'm in agreement with the others that have commented regarding the commitment of government towards IBTs. In the past, I stand to be corrected, the figure was 10% allocated to IBTs. Now we are down to 2%. But I don't want to dwell on that. I just want to see how we can work together with the government just to improve on one element. Okay. You mentioned during the presentation that the quantum for RDPs is about 283,000, and the quantum for temporary units is 97,000, which means if there's a disaster, you spend 97,000, then you again go and spend 283,000. Okay. I believe there's a better way of doing it, because here you're actually spending twice. And it goes down to what the president was talking about yesterday. And you know these areas that are prone to disasters. So you can actually plan ahead where you can actually relocate the people, so that when the disaster happens, when you build the structure, you make sure that it's a temporary structure. It could be, if you use IBT, it could be built quickly, but it could be extended later on to an RDP. I don't have all the ideas, but I'm saying there's actually a better way of utilizing that quantum. If you engage with those who are involved in IBTs, we might come up with a solution just to improve how you spend that amount. Thank you.
All right, thank you. Can we go that side? Yes, that end, the gentleman, yeah, right there. I'll come back this way again, colleagues. Yeah, please proceed.
Taikwas, good morning. All protocol observed. Minister, Deputy Minister, delegates. Integrated building technology. A directive from the President of the Republic of South Africa. And the President has shared information with us. He said to us, he shared information of, since 1994, government has spent 5 billion. No, government has spent 500 billion rand to build 5 million houses. But there's still a shortlist. There's still a backlog. And it will cost government another 400 billion rand to build 2.5 million houses. The emphasis from each and every speaker that came up there, the emphasis was on community participation. Because for who are we building these houses? We are building these houses for the marginalized, the poorest of the poor, the most vulnerable people. So you have to, it's a need, it's not a want, to get community participation. For communities to participate and believe and also know exactly what IBT is for. So our proposal as the Gauteng Housing Crisis Committee, we are simply requesting, it's a friendly and serious request, let us educate our communities. The information that we receive here today, we cannot keep this information to ourselves. We have to take it back to the communities to understand IBT better and how IBT can help them. So, leadership, minister, deputy minister, and also executives, can you please also make the slides that were shown here available to us? So when we go back to our communities, we'll be able to show them this is where we've been and this is the information we're going to share with you. The biggest request and the most serious request today is information sharing. And let us take the information that we receive here today on a bigger, much executive platform back to the people on the ground. Can we do that, please? Amasi, Kaikangans.
Okay, thank you very much. We're coming back. I think there's a hand here. Then we'll take the last round of hands. Then I'm closing. Gentlemen.
Mama.
Oh, sorry, ma. There's a light that is shining in my eyes. My sincere apology. Sorry, ma.
Yeah. Kalibitso ke Rose Molokwane.
Thank you, ma Rose.
From yesterday, people are talking, and it is like the contractors and the IBT implementers are crying. But on my side, I would like to look at the CSOs that are here and community-based organizations that are here to say, we talk about the partnership. We talk about the triple P, and it looks like the partnership ends up with the municipalities. I just wanted to check with our presenters that what kind of partnership can we create between the CSOs and the community-based organizations? Because immediately when we talk about the inclusion of communities, we talk about those that are the bridge between the government and the people, which are the CSOs and the community-based organizations. And it looks like when we are invited in these gatherings, we are coming here to make inputs that will help the triple P except the CSOs and the CBOs. Like what that lady said from Sawik, talking with the minister. Minister, I would like to check how we are going to do the post-summit, because I think today we are told that we are going to sign the social compact. How are we going to have a process to engage the CSOs and community-based organizations to really, because we are the ones that are nearer to the people. We are the ones that can educate the people to understand and to believe and to trust what is being brought towards their communities. But if we are coming here to make inputs that will help other people except us, then it will become a serious problem. So I'm just suggesting that we have a post-summit with the CSOs and the CBOs alone with the minister, so that the minister can also understand the language of the CSOs and the CBOs, because it seems to be these two languages are not the same and we don't understand each other the same way. So, and then with the presenters today, we also want to get engaged with you, because sometimes we are searching for the relevant stakeholders that can help us to implement the very same products and programs that are being done by the government. But we're having a difficulty of people that are supposed to be listening to us or opening doors to engage with us. I'm talking to the CFO, to BASA, to NHFC. We are talking with them, but doing nothing on the ground. And then IF is the first time I hear about that. We are also having land as the CSOs and the community-based organizations where we want to have infrastructure done with the support of the municipality. Somebody was talking about bureaucracy. How can we minimize the bureaucratic process that is happening within our government so that as organized communities, organized CSOs, can we also be understood that we are also the implementers of this development? It's not that we just come and make input into the policies. We also want to become the implementers of the policies. We want to become the monitors of the policies. But if the space is not created, it's only created when we come in this kind of conferences where we are talking and talking, and then after that you forget about us. That is not good. We are not coming to appeal or to request. We are coming to demand the partnership that will work for all of us. Thank you very much.
Okay, thank you very much, Mayor Rose. Mayor Vence, then I'll take the gentleman. That's the last hand. I don't see any. Okay, there's a hand there at the back. It should be my last hand. Please proceed.
Me.
Are there other hands at the back? I'll take the last round of hands, colleagues. Time is not on our side. Thank you. Proceed.
Okay. Thank you, Program Director Thomas Stewart from the University of Free State Department of Urban and Regional Planning. My question is addressed at a policy and budget level. We talk about human settlements, however, we are still focusing on housing subsidies. Is it not possible to get to a point where we have human settlement subsidies? And linking this to IBTs, we heard yesterday about the problems of destigmatizing IBTs, of popularizing it, of educating people. And one of the proven techniques to introduce IBTs to communities is by creating your public facilities by means of innovative methods, alternative methods, etc. So if we to have funding for that, it's a point of entry. So that's simply my question. I realize that it's at a higher level, at policy and budget level, but I think we need to start thinking about focus on settlements rather than just individual houses broken down into detail. Thank you.
Okay, thank you very much, ma'am. Ms. Ntuli.
Good morning, everyone. My name is Ofense Ntuli. I am a manufacturer of IBTs. I think my biggest concern and question is directed to the whole panel. I keep hearing the term cheap. So I've been in the industry for quite a number of years, for plus minus 8 years now. And one thing I know is that IBTs are not cheap. So manufacturing for contractors, they've always asked for a cheaper option because they'll tell me the budget is too low. So having to give them the cheaper option, which is unsustainable. And then coming back to rectify those issues a couple of months later, a couple of years later. So my question to the panel is there any strategic plan of going back to the drawing board and doing concise research in terms of the pricing of IBTs so that we really build something that is sustainable
and not just for the interim. Thank you.
Thank you very much. The gentleman, I think it'd be my last hand. Then after that, we will go back to the panel, and I will give them 3 minutes each to respond, then we'll wrap up. Please proceed.
Regarson Chetty from MIBT, Modular Innovative Building Technologies. My question is directed to BASA, but I want to say Mr. Donovan Goliath said it very well when he talked about innovation not being embraced. The banks in South Africa are very conservative. It's probably why we have one of the best banking systems in the world. But the big four banks collectively have received over $250 to $300 million each in the last 3 years to be used specifically for only 2 instances. One is affordable housing, and the other is renewable energy. But I'm disappointed to say that the Banking Association of South Africa has only one representative here, but none of the banks are being represented. And the cry from the floor is always the following: funding for projects, funding for entrepreneurs. It's a constant cycle that has no answers. So I'd like to hear where the banks sit in terms of this. I think Mama Rose said it very well. I think she's the first person in this conference that talked about post-summit deliverables. Maybe what should happen is BASA should make the effort, it's not like you guys don't have the money, to set up a summit, a conference, a platform where IBT manufacturers, suppliers, innovators, value chain holders are all represented so that people from the banks, your valuators, bond originators, financiers, development people, the value chain could actually look what's out there. Because my understanding and my interaction with the banks is you guys work in silos. One hand doesn't know what the other hand is doing. And the evaluators themselves, they've been there for 40 years, 30 years, 20 years. If all you know is what you know, and what you don't know is what you don't know, how are you going to educate yourself? So it's not no longer innovation, it's reality. From a banking association perspective, the entire world is embracing green building technology. You guys are the custodians for EDGE certification, but we know the greenwashing going on in the industry. How long is this going to be perpetuated? So government's making the effort. Yes, nothing, you can't put all the pressure on government to do all the things all the time for everyone, everywhere. The private sector is also going to put up its hand. So maybe that's some food for thought. Farai, you talked very intelligently about the quantums and the TRUs. I can tell you right now, TRUs are not a long-term solution. The capex for TRUs versus long-term sustainable solutions doesn't marry. But that's my personal opinion, and it's subject to negotiation and discussions. Thank you.
All right, thank you very much for that, colleagues. I think it has been a festival of ideas this morning, incredible input, questions, but also recommendation that can be able to enrich, in fact, as we synthesize and sharpen the value proposition in this regard. So let me call the CFO. 3 minutes for each speaker. After the CFO, please come in, Ms. Sibiya, and the colleagues. I will not call you. After one is finished, the other one will come in automatically. Then I will wrap up for the day. Thank you very much.
Thanks, Program Director. Thanks for all the questions. It's a good thing that the Honorable Minister is here. I'm going to leave all the difficult questions and all the policy-related questions to the Honorable Minister. She's going to deal with them because most of the questions are policy-related and all those things. I'm going to talk about the budget-related questions. More importantly, ladies and gentlemen, I can see the frustrations from the contractors. But the answer, if we are being truthful to ourselves and we are realistic, the answer is what the housing crisis have said. We are dealing with the vulnerables, the poorest of the poor. Remember, we are not building these houses for me and you that are waking. We have got a target market, community participation. Are the communities that we are building this housing for willing to accept? Is my grandmother, who is 84 years, willing to accept the house that we are proposing? I can hear what the contractors are saying. The people that are having certificates that are saying 1,500 units are too little. I'm going to take what the gentleman has said, that some years back, I've been with this department from 2013. We have never said 10% should be put aside. When we joined the department and introduced some years back, we said 1%. I remember Northern Cape, they took out the offer. The communities in the Northern Cape refused the houses. Northern Cape, by the Auditor General, they said this is fruitless expenditure. You cannot build a house and it stand there and then it's not occupied. Hence, we are saying, are the communities willing to accept these houses? We moved from 1%. If you go back to the grant framework, I was part of those that have been talking about IBT to say we need to change the way that we do business. We need to look at the innovation. It was 1%. There was no uptake. Now we are saying as we are going up, we can see that innovation now is a must. We need to start somewhere. We are already having projects on the ground that are moving. If we take the 13 billion for the Human Settlement Development Grant and put it for the IBTs, what will happen to the projects that have already started? We have got commitments. Hence, we are saying, as human settlements, we want to start somewhere. As human settlements, we are starting. We are not saying that is a maximum. We are saying, as I said and indicated, it is a minimum. But are the communities willing? We need to start there. We are starting with a minimum. If in Gauteng province, we have got an uptake of 10% for IBT, we need to start there. We cannot start with the money that we have put there, we say 2%, no, it's a minimum. But however, we need to start thinking about the work that is on the ground, the contractors that are already working. We cannot cancel them. They are going to take us, we're going to be sitting here with a lot of litigations. So what are we bringing in as human settlements? We are being realistic. We are saying we are starting here, we are gradually going up. As we conclude on the projects that are on the ground, we are bringing in this concept. So I'm sitting here putting in all those things to say we want to start. From the 1st of April, we are starting. Maybe when we come back next year, we would have concluded what we have started on the ground, the uptake, because the communities, I'm going to what Mam Rose have said. In our grant funding, we have put aside money for social facilitation. We are saying we need to start, we need to involve communities. What are our implementers? Are provinces and municipalities. In our grants framework, we have put aside money to say, can the municipalities, Mam Rose, and the provinces, there is funding for that, start talking to the people on the ground, the people that will be receiving these houses. And we are not only talking about houses. When you look at the slide I put, we are saying as we are no longer housing, we are human settlements. We have got economic facilities. If we have heard what the minister was saying, he says there are facilities, economic facilities in KZN that we have started building. Not the houses, but some facilities that we are saying we want to see the uptake. So the example that we are using, I'm going back now to the first, to Prof and Etienne. Prof, when you look at the ISUPG, when we are saying 2%, the 2%, we agreed when we adopted the MTDP. I know that I've got 3%, but facilitator, I've got a lot of issues I need to talk about, but I'm going to generalize them. When we looked at the MTDP, we say this is the bucket of funding that we are having. We agreed that with the informal settlements upgrading partnership grant, we are going to service the sites. So Etienne, when you look at the subsidy quantum, hence I put 183, I'm talking about the top structure. So the 2% of the ISUPG is set aside. Hence, I spoke about not the 166, because the 45, and I did indicate in my submission that we have got the 45,000 for the servicing of site. So that one was not included in the example that I put. On the SHDG, I'm talking about the top structure. So we need to look at the 1,500. Hence, I'm saying we need to start somewhere. We were approached by Gauteng provincial government and Provincial Department of Human Settlements. They are saying that, and we've been saying that, since we started, we wanted to deal with the upgrading of the informal settlements. We need to move away from the bucket system. You know, these chemical toilets, we call them chemical toilets. We are modernizing them. But if we go back, these chemical toilets are the bucket. And we agreed that we need to move away. We need an innovative technology. We got a business case from Gauteng to say, this is what we are having. We said, we are welcoming that. So it's not about the houses only. Even on the informal settlements, we are saying we want to come up with a decent way of sanitation. Because when it comes to our informal settlements, we are doing the easy one, whereby we give them chemical toilets. That is not decent. Gauteng says, we are coming up with a business case. We have responded to Gauteng. We said, as human settlements, we are in. We are taking you up on the offer. Because we want to see what is the innovative way of moving away from the old chemical toilets. Then we are, if it works and is acceptable by the communities, we are going to roll out. So hence I'm saying, bringing something new into our communities, we need community participation. We need to get the buy-in of all these community members. The 2% is not enough. Yes, I agree it's not enough, but it is a minimum. We need to start somewhere because we've got moving project on the ground. As we close those projects, we are able to bring in, because we cannot just stop all the projects on the ground. So we are moving. We are going up. As I said on my presentation, it's a phase-in approach. I will leave the 30% to the Honorable Minister. She's going to talk about it. But however, in our grant framework, we did say all the provinces and the metros, they are aware, everybody, that is getting our grant funding. 30% is set aside for women. And we are not going to change. We are not even compromising on that. When we go to a platform that is chaired by the Honorable Minister, the MECs and the MMCs, we are reporting on a quarterly basis on the 30% that their provinces, because and the metros are our implementers, they need to give work to the women contractors. That one, we are not unapologetic about it. I think on my side, a program facilitator, I've tried to cover most of the questions that came to the budgeting in my presentation. Thank you so much.
Thank you for the questions. I think there was a specific question that was directed to BASA around the missing middle. We note the concern. I mean, within our unit, like I said, we are mandated on financial inclusion. So we note that the banks do seem to be far removed from the reality on the ground. And we do tailor or focus on consumer education, noting that each of the banks also have their own consumer education programs. They teach on lending criteria, improving credit score. We also note that, yes, the missing middle, there is high indebtedness in that sector. So in response, there are some debt relief programs that are also in play. But I think also as BASA, because we are the association that brings together the banks, we will take it upon ourselves then. That point is noted and we will take it up. Then secondly, I think there was a comment on IBTs are not cheap. I think it was to the whole panel. I fully agree with that. We do note that that is something that we need to look at. I think our concern or proposal was if we do streamline the sector, because there are scalability issues. If it's just one contractor trying to get into that market, focusing on a certain part of the value chain, it's more different. It's much more different and more efficient if it's a bigger sector that's well understood. So that is our plea and that is our cry, because we also would want the process to be streamlined and better managed. There was a comment, I think it was general, on risk aversion kills innovation. And it ties in with, BASA or the banks specifically being very conservative in their lending criteria. I agree with that. They do have certain profits in mind, but we are also called upon, and hence we're here, to collaborate and see how we can improve on the system. We, within BASA, I think there's a comment around we don't know what we're doing or we're not talking to each other. Specifically, we look at the top 6. We communicate in committees with the top 6. Banks, you understand, it's no longer the top 4 anymore, it's the top 6, specifically within the affordable housing sector, where we do collaborate on sector-specific issues, including IBTs. So the request or the proposal for an IBT or specific BASA event, we also note that and we will look into it. Thank you.
Thank you very much for the questions. I will try to be brief. I know my chair does not believe I can do it in 3 minutes, but let's try. To Prof, thank you for the question. Prof, I do believe that there is an opportunity to pool the financing and as such be able to leverage the pool for commercial funding, for blended financing, and be able to pull in the private sector. However, from a PFMA perspective, of course, the CFO will guide in terms of what is doable from that perspective in terms of pooling that subsidy. So I think it is a good idea, as I've mentioned in my presentation. However, of course, the CFO is led by the prescripts of the PFMA. The gentleman, Dan, asked about there seems to be a doubt within government sector. Dan, you would have noted in my presentation that I highlighted what are some of the risks that the financiers are seeing, but we also highlighted what we're seeing as mitigants. So we're not just putting forward what the challenges are, we're actually putting forward what we see as potential solutions for us to be able to come up with funding instruments that would be most, that would be fit for purpose in terms of the IBTs. You also mentioned contractor financing, that you shouldn't, based on an appointment from a local authority, you should be able to get financing. Absolutely, I agree with that. That is, in fact, what we offer at the NHFC as contractor financing. As I mentioned, we are sitting outside. Please do come through and understand our contractor financing product. Zama, you mentioned EIAs. If you could also come and see me, it is not an easy, it's not a, it is really, that answer in terms of what we pay for is going to be informed by what that capital structure looks like for any type of transaction that we are doing. So it's a bit of more of a deeper conversation than to say yes or no. So maybe if you can come and see me, we can have a conversation about your transaction. There was a gentleman who came from a DFI that said he did not see the plan with regards to co-investments. It's unfortunate I didn't catch which DFI you come from. We do actually co-finance with very many DFIs, as well as commercial banks. You would have noted as well in my presentation, I mentioned PPPs, which is really useful for affordable housing, particularly because what is very important to understand with the NHFC is that our mandate is the missing middle specifically. So the end user needs to earn up to 22,000 Rand. Therefore, we need to make sure that the products that we are financing is able to cater to that particular market. So yes, we do co-finance with commercial banks, with DFIs, as well as with asset managers. Oscar, you asked a question in terms of our timeframes. Please do come and see me outside. I'll be able to give you answers where that is concerned. And maybe I'd like to deal with NHBRC. There's a gentleman who raised concerns that we're treating this as early stage risks. I think I will agree with you where that is concerned, because we are. you would note that a lot of the providers or some of the providers have been in this space for very many years, as you have mentioned. However, what is important is that we need to get the adoption of the entire value chain. We need to get the adoption of the financiers, the valuers, the insurers, the policy owners, as well as community acceptance. So yes, we are still having early stage discussions. It is unfortunate 40 years later, but it's because we need to be able to make sure we're incorporating the entire value chain and not just the providers. And then I won't speak into, there was a question with regards to DFIs being risk averse. You would have noted in my presentation, I also noted the key elements that financiers look at, but also noted that these are in varying forms depending on whether you're a commercial bank or a DFI. Just as an example, the DFI as an example would give a developer a loan to value of up to about 90%. A bank will not give you a loan to value of 90%, they'll give you a loan to value of about 60%, which means that we require far less equity contribution than what a bank would require. So we need to look at that in context. And lastly, I will deal with, there was a lady from Sawick who said this information is not shared. As the NHFC, we in fact have an MOU with Sawick. We are very active with Sawick. As recently as November, we were actually, we had a contractor workshop in Mpumalanga, and Sawick was also invited. We had both the president of Sawick as well as the regional leader of Mpumalanga in our offices, I think, towards the end of last year. So we are very involved with Sawick. I think I will end it there, colleagues. Thank you very much.
Thank you for the questions. I'll also be very brief. So the first one was around exploring, perhaps centralizing the 2% subsidy that is set aside across the grants. Look, I think if you want to obtain economies of scale or economies of scope in the administration of the intervention, that idea needs to be looked at very strongly, because it will simplify the manner in which financiers are coming in, engaging with the department, and also structuring a program at scale, rather than when you engage individual provinces or municipalities. So I think it's a very good point. It's more for the department, but I did indicate that already from the 2% that has been identified, on our side, we still have headroom of about 50 billion or so, and that is about scaling up. And I even said we are offering that, a portion of it, to the sector, so that we can put up partnerships. And maybe in the same vein, I'm addressing the issue of the post-summit actions. We indicated that we want to avail that funding, I'm repeating, or a portion of it, so that we can put up a program that elevates the IBTs to a higher level through scaling up, catalyzation. I gave an example of fast-tracking allocations through the MTFs, bringing it into an MTF. So I was also looking at that. So in relation to risk aversion, I need to indicate that every project has got its own merits and demerits. And financiers or funders will always look at that, including if it's not a project finance approach, maybe it's corporate finance. They will look at the risk of the institution. So the risk aversion is around minimizing the exposure and the risks for the institutions involved, while also enabling the sector to be able to work. So in short, I'm saying it will always be there. But with the human settlement space, as I gave an example of social housing, you need to understand that you need to remove that cap a bit, be willing to be patient, be willing to be developmental, be willing to handhold, and extremely concessional. And that is the promise that the IF has given this morning. In terms of the criteria for loans or grants and the timeframes, the general criteria is that the projects must be government-owned projects, not to say that they don't have private elements. They have private elements, however, led by government sponsors. It's a well-known fact that developers are private in nature, and they're the ones packaging the feasibility studies. They're the ones who know the projects better. They're the ones who are implementing them. So in our model, we engage with both organs of state as well as the private sector developers. However, our clients are organs of state. So a loan, mostly we advance it to projects that are commercially viable. You can advance a loan to a project that is social in nature. The practical instrument to solve that problem is a grant. I think I gave examples of that. The sectors that we look at as the IF, it's mostly your large network industries. So basically energy, water and sanitation, telecommunications. We also look at transport and logistics. On the social front, it's mostly human settlements in the main. We also look at education, but we have agriculture and agro-processing. Another sector that we bank is the municipal sector, where I spoke about bulk infrastructure projects to be able to support and enable the top structures that we often talk about. From a ticket size perspective, I did indicate that it's 1 billion and above for projects. From a capital cost perspective, 3 billion for programs. However, we don't want to crowd out opportunities that have already done some work and they require notional amount of funding to complete the projects. Hence I said, if the project is still that large or the program is still that large, but you need about 100 million, you can still approach us. Don't be discouraged by the quantums around 1 billion and above. Let's have a conversation about what is possible, and then we can be able to collectively solve for that. The last point is around the cost effectiveness and efficiency of IBTs. I also agree that they are not cheap necessarily. So what will really help us to recalibrate the price is when we actually do the due diligences for the actual project, because you'll go in deep to check the benchmarks, you do the appropriate studies, and then eventually you have what we call independent technical advisors and cost advisors who will say, this is the reasonable price that you can accept or not. So it's more of a financing process, but I do agree from maybe a government policy perspective, more research around cost benchmarking so that we can have a reference point around prices and quantities around IBT. So there were not a lot of questions directed to me. Most of the colleagues addressed the issues. And I was a bit hurt thinking that the 50 billion is not needed. So I'm urging again relevant partners here to really come forward and engage with us alongside the government partners to see what is possible to ensure that there is really dust on the ground and people get to benefit from this. And on this issue of IBTs not being acceptable, I think it will also go a long way to how we deal with them, how we fund them, how we implement them, but how do we make them secure for people to be able to really accept them. Thanks.
All right. Thank you very much for that, for our panel and the responses that they've provided. I know that there are a few questions that have also been directed to the Honorable Minister. As always, our Honorable Minister is always on the ground. And I will give this opportunity to Honorable Minister to actually also deal with those questions that in fact have been raised. Honorable Minister.
Thank you very much. I'm not an expert, so I don't want to sit next to them. Good morning, colleagues. Thank you very much for the opportunity. I'm not going to take all the questions because I think there were attempts to deal with them, but I wanted to deal with the policy issues. Firstly, the sectoral percentage or the sectoral charter guideline in relation to women and special groups is 30%, all of them. And I can tell you now, and my members of the portfolio are here, you can even give them the task to go and check it. At the department, we had about 40% plus. Almost all my entities are even topping the department. They had about 50% plus. That's how much we support. So we're above the sectoral code or the charter itself. But I'm going to make a plea, particularly to SAWIC. Solve your leadership issues. It makes it difficult to work with you. I did not want to say it, but because it is raised, as if we're not making an effort to assist, when we have a challenge, when we want to assist. As we speak in this conference, there's a group standing outside. I wasn't late. I was locked out. I couldn't come in because security was dealing with another SAWIC that says it must be registered. I had to leave them with the DM to solve them so that I come inside here. So because it is said inside, it's so sad sometimes that attempts that we make, then, you know, they tend to be something else. But we support women and we always win. And by the way, I'm not angry. I said I'm giving an opportunity to the two teams because I can take sides. When you are done, please come to me and I will give you the support. We're a ministry that's led by two women. It's just an indictment on us not to support women. I don't know where we will go and cry if we don't support women, being women ourselves. I mean, the other ones don't want us anyway. So I need you. I need you more than I can mention. I want us to deal with this policy issue and understand it properly of the concurrence function. That is not only for human settlement. Water and sanitation, it's a concurrent function. You provide and you give for the next layer or the sphere of government to give the service. And I also don't think it's a hindrance because our constitution says section 154 places an obligation on both national and the province to support a municipality or national to support a province. The biggest challenge we need to face jointly is to assist in community mobilization to ensure the acceptance of the product. It's very interesting. I went to KZN and I was handing over houses which were affected by the floods, and we've built a house after a TRU. And now I wanted to take my TRU so that I can use it for another beneficiary. And this family member said, Taibo, ngesizulu le ndlu yinhle minister sicela usishiyele yona. So there is acceptance. And by the way, remember a TRU, it's not even up to the quality of what the IBTs are. IBTs are even much higher because that one we put it with an intention really, as per our policy says, that we'll remove it as we hand you over a traditionally built house as we know it. But we have got provinces which actually have moved because a portion of our grant allows a metro to build a health facility, for example, or a social amenity on behalf of the municipality. There's the mayor of eThekwini. They are building a health facility using IBT. Already, we have got over 350 classrooms in the Western Cape. So we're trying to push, enhance the social campaign. So the issue of silos, maybe it's our poor communication in government. Because we are intending that health, ourselves, and education in the main at the basic level needs to be able to move towards direction so that we create human settlements. And the uptake is better on the other amenities of government. But why were we opting for that approach is to internalize it with our communities, that it is a user-friendly system equally. In some instances, it competes even far better than the traditional norm or ways of doing things. And I am not suggesting there are no challenges in mechanics between one department or the other. There is. But it has not stopped us to try and be creative about the 1% where we had challenges in terms of the rollout. And that challenge still remains. My last point, I would want to talk to the cheap sustainability, my sister and whatever. We're regulated. We're regulated, and highly so. And I think I like it because it makes me and any other person, and it forces accountability, it forces transparency. And our frame of legislation says efficiently, effective, and economic. It doesn't say cheap. It needs to be economical. So it takes us back to Tatan Ngobeni's point that we then need to put a case on the table on how do you create this sustainability. Could it be that the other system, you are still going to reinvest in it if there are challenges in it, which has happened anyway. So it's how ourselves as planners, developers, implementers from a social point of view in finance, and also constructors themselves, when they get an opportunity to build or to given an opportunity to roll out, that we build quality, where the AG at the end of the chain will say there is value for money, even if this one is 10 rand extra, 10 rand being an example. I don't think it says you must die with the chip. The system doesn't say that. PMFA anyway, you can download it. It says economic. And economic does not necessarily translate to cheap. I think we need to be brave. We need to find solutions. But we also need to make a determination where do we start. If we're going to start all over, I don't think we're going to win anything. The 10%, well, the CFO has dealt with it. Arriving at the department, there was never one. And that is why I said jokingly to the president yesterday, I don't want to say this percent, because I know for one, he's going to be the one to say, no, 2% is minimum. Increase. But I have a problem with the uptake. I have. And I think we need to rally around and do that. A very interesting session. I've learned a lot as well. Thank you very much.
Thank you very much, Honorable Minister. Ladies and gentlemen, as we conclude, thank you very much for your participation. And it has been a great honor to be able to navigate this ship through the choppy waters. Safe to say that issues that have been raised will be processed, thoroughly synthesized, and put into action programs. I conclude by quoting Khalil Gibran. In fact, let me, because it's a long quotation that I prepared, let me take Amilcar Cabral, who says, always bear in mind that people are not for ideas that are elusive, for things that in everybody's mind. They are fighting to win material benefits, to live a better and a peaceful life. Like our Honorable Minister did say, that the conversion of today marks a historical moment. It marks a systemic shift in terms of how policy, how human settlements is planned, funded, and executed. On that particular note, colleagues, ladies and gentlemen, please let me thank the experts that have been here today and say that we have learned a lot from you. And I thank the Honorable Minister being here, the Honorable Deputy Minister, the Honorable members of the Portfolio Committee, the Chair of the Portfolio Committee, as well as the Director General, the political leadership that is here with us today, the foreign dignitaries, the academics, as well as all and sundry that is here with us today. Ladies and gentlemen, on that note, can we break for